demand for data storage, and so that will go on too. And until we have something that's really breaking, say something like quantum computing, which is far, far away in the future, these companies still will be an anchor in your portfolio, especially when you have times like this, when you sometimes don't have a compass, frankly, and get a sense of what's going to happen next week, but you know further on that these themes will be robust. And you've got Peloton, that IPO, Peter, I know you're hot on. I think you're being a little sarcastic. I'm hoping I think you said that only people in prison exercise regularly. What? Well, let me just say a couple words about Peloton. Just a couple of words. You know, I think it will go the way of GoPro and other companies that have had fads. You know, one of the things, you can look at all the financials, right? But let's just use a little dose of common sense. Most people, most consumers do not like to exercise in isolation in their home. It takes a tremendous amount of self-discipline. And most of these bikes, the exercise bikes and other treadmills, etc., usually end up as a clothes hanger, frankly, after a certain period of time. So the fundamentals of Peloton, in terms of what it's betting on, I think is very weak. And I did mention prisons because I was thinking in terms of where would this sell best. It's places where you would be confined and would not be able to go to public gyms, and of course prisons are, you know, or maybe apartment complexes. I don't know if we have to go to quite that far. I hear they're selling quite well there as well. Now we know what Peter doesn't do at home. Exactly. Thank you, guys. Michael Klarfeld, Peter Anderson, appreciate it. Bye-bye. Shares of Altria and Philip Morris both falling today in part on an investigation into Juul's marketing practices. Frank Collins got the story and some surprising comments from the CEO of Juul. Frank.
Melissa, Juul's use of social media influencers and whether minors were targeted is the focus of that FTC probe. According to the Wall Street Journal, the FTC would not comment. This report comes a day after Juul announced a new checkout system to prevent minors from buying Juul products, and just a few hours after an interview on CBS with CEO Kevin Burns.
The data I was looking at recently shows that it's not only former smokers that you're converting. Some people are starting Juul and they've never been on nicotine before. What's your advice to those people?
Don't vape. Don't use Juul. Don't start using nicotine if you don't have a pre-existing relationship with nicotine. Don't use the product. You're not our target consumer.
Shares of Altria falling more than 3% on the news. The company bought a 35% stake in Juul in December. Philip Morris shares also dropping on Tuesday. The two companies announced that they are in merger talks. Juul says it cooperates with all investigations into the company, adding it's never marketed to minors, and it also released this statement about its social media. Our paid influencer program, which was never formalized, was a small, short-lived pilot that ended in 2018. We worked with fewer than 10 adults on Juul-related content, and they were all smokers or former smokers over the age of 30. Juul controls about 75% of the U.S. vaping market. It's also been blamed for a rise in teen nicotine use. Back over to you.
Frank, thank you. Frank Holland. Coming up, Apple shares higher today on trade optimism, but new numbers showing the company's increasing reliance on China. Should that worry investors? Plus, what can we expect from the just-announced Apple event? Disney Plus launches in just a couple of months, and Disney says interest is already surpassing expectations. How good will it be for Disney, and how bad for Netflix? Power Lunch, be right back.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike, and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet, and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Strength and things. Strength and things. Strength and things. Strength and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and.
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
I didn't choose you. You chose me. When you broke from the crowd and pawed at my knee, soon you'll be feeling right at home. You'll be a bit unsure, but you're free to roam. What's good to chew? What's nice to nibble? Wet food, dry food, tin food, kibble? You might sometimes be cheeky, not always wise, but I know I found love in those puppy dog eyes. Join the free VIP Puppy Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/puppy club or join in store. T's and C's apply.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try Click and Collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try Click and Collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Chloe, is that you? Still lugging that old laptop round your lectures?
No, my name's not Chloe, it's Claire. No,
No
Clarissa.
one wants to be seen with an old laptop at uni. Ask Curry's PC World about a new one, like the stylish HP Envy with its light-in design. Only $749. Plus, save £100 more when you trade in your old qualifying laptop.
Nice new laptop, Chloe. Thanks. It's Chloe, like the goddess.
Save with instant trade-in at Curry's PC World. In-store only. See website for laptop trade-in qualifying criteria and valuation.
Welcome back. Time now for a power rundown. 3 big topics to dive into: esports, Disney Plus, and Apple. Joining us now is Laura Martin, media and internet analyst over at Needham. Laura, great to have you with us. We do want to start off with your new note on esports. That argues that video games and esports will cannibalize viewers from traditional media. How fast will that cannibalization happen, do you think?
Probably next 3 to 5 years. We're getting one out of 3 kids under the age of 25 is spending an hour a day playing esports and or playing video games. And for every hour you play, you watch another hour so you can get better. And globally, we just had a 16-year-old win the Fortnite world champion for $3 million. So we now have 100 universities giving varsity scholarships to go to college by playing video games, and they get to keep their winnings. So why would you go to the NC2A where you're working your ass off as a football player to get your college tuition paid if you can do esports and keep the winnings and their $1 million prize pools?
And it's probably a lot more fun.
So all of that means that they're a lot more fun, and these kids love it. So I think we basically have 450 million viewers of esports right now, and increasingly we're going to see this higher profile in the U.S. as prize pools get bigger.
But when we say traditional media loses out, we're really talking also about Netflix. I mean, I know Reed Hastings had mentioned that in jest sort of, I believe it was the first quarter conference call or maybe the fourth quarter, where he said Fortnite was one of its #1 competitors. How badly will those sorts of streaming services feel it, since that is what the teenagers are watching? They're not watching, CBS necessarily or ABC.
I think it's a big problem. Like Reed used to say that his biggest competitor was sleep, but these Fortnite players play 3 hours a day. So he's right. I think they're actually playing Fortnite more than they're sleeping. So I do think it's a problem for all of these over-the-top services if these kids are. And by the way, when you get legalized sports betting, if you get sports betting on esports, I think that elongates engagement more, because if you bet $1 on a certain winner, out of 100 Fortnite players, you're going to stay till the end of the game to see if you won your $3 for the dollar you bet. So I think more and more these interactive games and competitive games are going to take share from all streaming services.
Speaking of streaming, Laura, the hype for Disney Plus seems to be real. A new report is saying that interest in the new streaming service is outpacing Disney's initial projections. Is that a surprise to you?
It's not. I think Disney's core competence is marketing excellence, and I think that kid hook, like children are churn-proof, I think that's a great description of the Disney superpower. So I expect people to, for $7 a month for 30 days, take Disney, and then their kids are not going to let them churn. So Disney projected originally they'd be at 20 to 30 million subscribers in America in 5 years. I think that could be higher.
Crazy. And then we have Apple sending out these invitations, Laura, for the September 10 event where those new iPhones are expected to be announced. So the iPhone Pro reportedly is coming. What else?
So they're saying they're going to introduce 3 new iPhones. I think the important point to make here, which would be a controversial point of view, is that the importance of new iPhones is on-ramps into the ecosystem. So you want cheaper phones and you want higher end phones that get people to come to the ecosystem so that you can sell them the new arcade service, which is video games, the new over-the-top service, which is video, more services like AirDrop and cloud. And because what our data shows, what our research shows is once somebody has 3 services, they never churn. They'll stay in that Apple ecosystem sort of indefinitely. So more on-ramps and more on-ramps into the Apple ecosystem and more products once you get there. The sweet spot is 3 products. Once you have 3 products, you're not going to churn out of the Apple ecosystem.
But do you need 3 phones for that? I mean, you know what I'm saying? Like,
you need products.
Right, and they've tried this sort of upscale, downscale thing before.
I'm not sure that's true. I think I would argue that what Apple has a monopoly on today is the richest 15% of citizens in the world. And its monopoly has been very high end, you know, $1,000, $800. So to the extent they're lowering their price point, which increases on-ramps into the ecosystem, I think that's a positive.
All right, Laura, great to see you. Thank you. Laura Martin, Needham.
My pleasure.
We're less than 3 weeks away from the next Fed meeting, and pressure is mounting on the Fed, and not just from the president. We're going to talk to a former Fed governor next about why President Trump might have just put Jerome Powell in a lose-lose situation when Power Lunch comes right back.
At Fidelity, we believe your money should always be working harder. That's why your cash automatically goes into a money market fund when you open a new account. And Fidelity's rate is higher than E-Trade's, TD Ameritrade's, even 10 times more than Schwab's. Plus, only Fidelity has 0 account fees and 0 minimums for retail brokerage and retirement accounts. Just another reminder of the value you'll only find at Fidelity. Open an account today.
With the Grubhub delivery app, if you want it all, you can get it all. Grubhub. Restaurants you love, delivered. Every day, the promise of better sleep is arriving on more and more doorsteps. When shipping is free and setup is simple, you can just focus on one thing: the pure comfort of an award-winning mattress. So maybe the secret to great sleep isn't such a secret after all. Save 10% on America's #1 mattress and try it for 100 nights risk-free.
You want a great-looking lawn, but have dry spots, dog spots, high traffic areas, and shade. Not anymore. Introducing the revolutionary Hydro Mousse Liquid Lawn with spray and stay technology. The grass grows where you spray it. If you can water your lawn, you can hydro seed. Simply attach to any garden hose and turn the dial to seed. The Green Mousse formula contains an eco-friendly sticking solution that attaches the seed to the soil and a conditioner to loosen hard dirt, allowing it to absorb water, resulting in a terrific-looking lawn. It's perfect for dog spots, high traffic areas, large areas, and shade. Get the complete Hydro Mousse kit for only $19.95. That's enough to do 100 spots or 50 square feet. But call now and we'll double the coverage. That's an incredible 200 spots or 100 square feet. And don't forget to ask the operator for large lot discounts. So don't put up with this when you can have this.
Call 1-800-503-8114 or go to hydromousse.com.
By choosing Policy Genius, we were able to compare many different policies in a very short amount of time. They were able to kind of navigate me to the right policy. My husband and I feel very much at ease now that we know that our family is taken care of.
This trade war is much worse for China than it is for us. And if you don't believe that, you're just not willing to accept facts. Maybe they just want the trade war to calm down while they try to address the increasingly violent protests in Hong Kong.
Welcome back to Power Lunch. I'm Mike Santoli at the New York Stock Exchange. Check out the beauty stocks. Bit of a mixed bag this quarter with ELF and Estee Lauder in the green for Q3, while Ulta and Coty have broken down a bit. So as Ulta gears up to report earnings after the bell today, could this be the start of a makeover for the group? Bill Baruch of Blue Line Futures and Gina Sanchez of Shantico Global are your Trading Nation team today. Bill, get us started. Just give us a snapshot of how you think Ulta and Estee are holding up here. Kind of different segments of the industry, but at one time or another have been leading consumer stocks in this cycle.
Both of these stocks are trending very strong, and there's no reason to think it's going to stop. Ulta broke out above highs in March, and that was about 315, 320. We're coming back and testing that level right now. You also have the 200-day moving average there. So this is where you buy Ulta. However, a weekly close below 315 is going to encourage more selling. So be cautious, but a move out above 340 becomes very bullish. That's where the 50-day moving average is. As for Estee Lauder, you're seeing this thing trend very strongly. Broke out about 2 weeks ago above a trend line. We're coming back in near retesting that about 195, 197. That's support, and it's well out above the 50-day and 200-day moving averages. So right now, it would say the trend is going to continue as long as it stays above 195, 197.
Gina, obviously the backdrop here is, as a sector, cosmetics are doing well. You have the selfie economy in their favor. But Estee Lauder has also been caught up in this kind of big global quality stock trade. And of course, Ulta is, after all, a physical retailer mostly. So where does that take you?
Yeah, you're absolutely right. In fact, the fundamentals for Ulta are actually quite good, except that they sit in that retail sector, and the retail sector has been having a lot of challenges. But if you look at the way Ulta has pivoted from just bricks and mortar to offering more of an online offering, their latest annual report would suggest that that's going to continue to drive their growth. And so I think within the retail sector, they look fantastic because beauty is very much a recession-proof commodity. And so, you look at the long term for Ulta, I think the long-term fundamentals are stacking up very well. The challenge is going to be its valuations. It's trading really hot. It's trading at 24 times trailing valuations for PEs versus forward PEs of only like 9 times. And so, I think the challenge is going to be how that sort of works itself out. And I think that's one of the reasons that it's been struggling at this point. So we have to see how this valuation element shakes out.
Sure thing. Yeah, it has been a bit of an exception in physical retail for that relatively high valuation. Bill and Gina, thank you very much. For more Trading Nation, head to our website or follow us on Twitter at Trading Nation. Melissa, back over to you.
Mike, thank you. Mike Santoli. Ahead on Power Lunch, the great rate debate, President Trump renewing his attacks on Chairman Powell and the Federal Reserve. Former Fed Board Governor Randy Kroszner will weigh in next. Plus, today's Powerhouse will take you on a tour of the most expensive home for sale in the U.S. and a powerful hurricane barreling towards Florida, what it means for those traveling over this big holiday weekend. All this when Power Lunch returns.
And now, the latest from TradingNation.CNBC.com and a word from our sponsor.
One mistake that many traders make is trying to pick the perfect entry price for a stock they'd like to own. Here's something to consider. Why not just buy part of the position you'd like to have? That way, if the stock goes down, you'll have an opportunity to add additional shares at a lower price and improve your overall cost basis. I'm Randy Frederick, and Schwab is the better place for traders.
So Schwab taught me about four-legged option strategies.
Live big and spend less on the brands you adore and dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike, and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet, and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings and things. Strings and things. Strings and things. Strings and things.
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
From the moment I saw you, the last of the litter, I knew you were the one, and would soon hear the pitter-patter of tiny paws on our kitchen floor, and tiny scratches on the bedroom door. You might sometimes be mischievous, sometimes be shy, but I know I found love in those kitten cat eyes. Join the free VIP Kitten Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/kitten club or join in store. T's and C's apply.
For our half-price sale on a choice of floors and beds. For first-class free fitting. For kicking your heels off. For overexcited kids. And pets. For thrills and spills. For a special welcome home. Can't Carpet Right. For life. Offers end Tuesday. Free fitting on selected carpets and vinyl with selected underlay. Minimum spend applies.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Good Thursday, everybody. I'm Contessa Brewer. Here's your CNBC News update. The Stromboli volcano erupted Wednesday, spewing fiery chunks of lava onto that tiny Italian island. It's 135 miles southeast of Naples. No immediate reports of injuries. It's the second explosion in less than 2 months, or eruption, as they're known. France's longest zip line sends riders solo or in pairs on a 1.6-mile journey at speeds as fast as 80 miles an hour. The attraction in the French Alps offers spectacular views if you can stomach it. According to AAA, the national average for gasoline prices is a little more than $2.58 a gallon, 25 cents cheaper than Labor Day weekend last year. The highest prices still tend to be in the West, in the upper Midwest, and the Northeast. And this morning, in a galaxy not so far away, a new land open to the masses. Fans filing into Disney's Star Wars Galaxy's Edge at the Hollywood Studios Park in Orlando. That's your CNBC News update. At this hour, I feel like we just went around the world there, Melissa.
We did. What a tour, Contessa. Thank you. Travel agents. Contessa Brewer. Let's get a check in the markets here. The bulls are off to the races here. We are close to session highs right now with the Dow up by 363 points or 1.4%. S&P 500, 2929 is the session high. So we're just a point off of that, up 40 points here, 1.4%. The gain. NASDAQ is higher by 127 points or 1.6%. All 11 S&P 500 sectors are in the green. Tech and industrials are leading the way. And one sector flying higher, airlines. Take a look at some of these gains. American up nearly 5%, followed by United, Southwest, and Alaska. We'll have more on the airlines later on this hour. The oil market is closing for the day. Let's get to Seema Modi at the CNBC Commodity Desk. Seema.
Good afternoon, Melissa. Oil prices moving higher along with stocks holding above $60 a barrel. Halima Croft at RBC Capital says part of the move in oil is due to the standoff with Iran, which continues to heat up, plus the drop in U.S. crude inventories as summer winds down. Currently looking at WTI crude at $56, but ICE Brent crude is the international gauge holding at $61.09. Now, this comes as gold and silver have both been selling off. Silver staging a major reversal, and gold is down by 1.2% or $18, holding at $1,530. Guys, back to you.
Okay, Seema, thanks. President Trump continuing his fight with the Fed, tweeting today, the economy is doing great with tremendous upside potential. If the Fed would do what they should, we are a rocket upward. Steve Leisman is here with the latest on those tensions.
Yeah, Kelly, the Fed faces two historic dilemmas: how to respond to President Trump's barrage of criticism of its policies and personnel, and second, how to respond to the trade war. There is a playbook for neither of these. On responding to the tweets, the Fed has publicly decided not to respond, sticking to explaining what its mandate is. On the trade war, Powell has suggested the Fed will address the effects of tariffs when and if they show up in weaker economic data, but he's rejected the president's urging to cut interest rates to weaken the dollar and help exporters. Now, former New York Fed President Bill Dudley, in a Bloomberg op-ed, said the Fed should go further, holding the line on rates so as not to enable the president's trade war. But he drew a sharp rebuke from the Fed itself when he suggested the Fed should consider the prospects of President Trump's re-election in setting interest rate policies. The Fed said, quote, the Federal Reserve policy decisions are guided solely by its congressional mandate to maintain price stability and maximum employment. Political considerations play absolutely no role. But many agree with Dudley's point here that the Fed is right to take the trade war as it comes and as it affects the economy, not to enable it by cutting rates preemptively or to play that game of cut rates, weaken the currency, cut rates, weaken the currency in this race to the bottom that people talk about.
Yeah, Steve, stick around. Former Treasury Secretary responded to Dudley's op-ed today in an exclusive CNBC interview.
For a trusted former official of the Fed whose thinking is inevitably going to be tied to the Fed to recommend that they raise interest rates so as to subvert the economy and influence a presidential election is grossly irresponsible and is an abuse of the privilege of being a former Fed official.
Let's bring in former Federal Reserve Governor Randy Kroszner to the conversation. Randy, we're glad to get your take on this. It's been a very controversial op-ed. I understand all of the outrage when it comes to what Bill Dudley said, but isn't what he said very practical in many ways? I mean, if the Fed wants to get out of the box of being the backstop for political for policy made by the administration, doesn't it have to look longer term and say, you know, we're going to stick by what we want to do regardless of what the outcome is?
So I think central banks have a responsibility to respond to the policies that are given by fiscal authorities, trade authorities, or things that happen globally. They might prefer things to be otherwise, but I think their mandate is to respond to those, and I think the appropriate thing to do is take them as given. They might want them to be different, but that's not the way the world is. Think about Mark Carney in the UK. He's clearly someone who is not supportive of Brexit, but I think he did the right thing in easing monetary policy in the UK to try to mitigate the impact of Brexit on the UK economy. I think that was the right thing to do, regardless of whether they thought it was a good or bad thing to do to have the Brexit vote.
You know, what's so difficult about the Fed's position, though, in this particular case, Randy, is that the president can threaten steepening tariffs in a tweet, set a date. The Fed meeting happens, they want to cut rates based on that, and then the president can all of a sudden tweet out another policy saying that we're not going to do it. I mean, it's a very sort of, it's happened so quickly. What do you expect the Fed to do when they're cutting rates? I mean, you can't respond that quickly when it comes to monetary policy, can you? Should you?
No, and that was not what I was suggesting. I mean, think about fiscal policy, which is the standard thing that the Fed has to deal with. The Fed doesn't control fiscal policy; it has to take that into account. There are lots of assertions made about, candidates who want to cut rates or tax rates or increase tax rates, spend more, spend less, and so they have to try to anticipate what's likely to happen and make policy around that. That's what the Fed has always done. That's, I think, what the Fed should do. It shouldn't be trying to influence the outcome of whether there's a tax cut or a tax increase, but it should definitely take into account what is likely to happen. And there's always uncertainty about that.
Randy, there's a weird situation. Let's stipulate that, what Bill did, I've known him for over 2 decades, I think now, from a Goldman Sachs economist to running the desk at the New York Fed, that was wrong. And I just don't understand where that came from. It's so clearly not appropriate. The other piece, though, about enabling the tariff war and whether or not the Federal Reserve should hold rates at a certain place, because if you look at the tail of the tape, Randy, it's a little spooky, right? They cut rates, and the next day the president announced tariffs on China. And then Powell spoke and sort of suggested we're going to cut rates some more. And then, within 20 minutes, the president raised tariffs on China. It appears as if the Fed is enabling the president, whereas maybe if it held the line, the president wouldn't feel so free to hike tariffs and then, frankly, engage in what is a very difficult economic trade war here.
So, first, if you look at the CBO estimates, so far what they estimate is between 2018 and 2020, the impact of tariffs on the U.S. economy will be 0.3% level change. So hardly any impact on growth. So I don't think it is, at least according to the CBO, the first order impact on growth. There could be impacts on uncertainty that affect investment and such. But I really don't think that the Fed is thinking about it in this way. I don't think, I can't say what the president and the White House are thinking about. But if they are concerned about a downturn and concerned about the uncertainty of the policy that may change from day to day, that's just like dealing with fiscal uncertainty or global macroeconomic uncertainty. They should be taking that into account. I don't see that as enabling or not enabling.
Yeah, the only thing I push back with you, Randy, is when you only have 2% growth, 0.3 is a meaningful number. And I think...
No, but that's not a growth. Remember, that's not the growth. That's 0.3 over a 2-year horizon.
Right.
So that's hardly anything on growth.
Right, on the growth rate, but 0.3 of 20 trillion is real money, isn't it?
But that was the maximum impact,
Right.
And certainly that is a real impact.
I'm just saying also the history of this, Randy, is we've underestimated it, right? We've underestimated the psychological effects. If you look at CEO confidence numbers, and also, by the way, what's happening in Germany is linked to what's happening in China, is linked to what's happening in the United States. The linkages here, I understand and I appreciate what you're saying about the level of growth and the direct impacts, but what I think we've learned is that from a corporate standpoint and a global trade standpoint, the impacts are quite a bit larger.
Well, again, if you look at the U.S., we just had 2% print in the most recent quarter. We had 3% print in the previous quarter. We've had more than 2% growth for every quarter since, with the exception of Q4 of last year, for the last few years. So it's really hard to see much of a major impact on U.S. growth. The 0.3 is a level effect. So over a 2-year horizon, it's the level of GDP would be different by maximum of 0.3, which is not that much in terms of growth. I do agree that one of the concerns that I have, and I think that many people have, is that investment has been low. And I think policy uncertainty, both domestic and international, has been very much weighing on CEOs and weighing on firms for that. But the consumer is clearly powering through. That's what got us to 2% growth in the second quarter.
All right, we're going to leave it there. Thank you so much, Randy Krosner and our own Steve Leisman.
To the bond market now, where Rick Santelli is tracking the action after that awful 7-year auction earlier. Rick?
Yes, let's look at an intraday of 7-year. We often don't show a 7-year, but as you can see clearly at 1 Eastern, it spiked up a bit, as all maturities did. We even saw 10s to 2s flirting with 0. If you blinked, you missed it. But the real issue here is we do have a rebalancing going on. There is an impetus to get in front of what needs to be marked to Friday's close, where we're going to see some selling in treasuries and most likely end up buying in stocks. And getting in front of it's a whole game in and of itself. But maybe today's biggest star is the dollar index. Look at intraday of the dollar. The high is 98.55. The current high going back to May of 2017 is 98.50. Now, even though we backed away from that level, as you see on this May 2017 chart, it's a big day. The euro is already at fresh 27.5-month lows, and it just underscores that when you have a good economy, 2% might not look great. But once you look at the dollar, you see that based on global conditions, it's doing well, and it's showing up in the strength of the dollar. Kelly, back to you.
Rickster, thank you. Rick Santelli, we've got a news alert on a story we've been following here with Amazon. On Monday's Power Lunch, the Wall Street Journal's Shane Shiflett laid out his investigation into Amazon's growing problems with third-party sellers on its site. And now Congress is weighing in. Let's go to Deirdre Bosa with the details. Deirdre.
Hey, Kelly, we've also got alert on Huawei, which I just want to mention first. According to a report from Dow Jones citing sources, U.S. prosecutors are looking into new allegations of technology theft by Huawei, alleged theft of smartphone camera technology, and it includes a subpoena from U.S. prosecutors for documents. Now, it suggests that the government is investigating aspects of Huawei's business practices that were not covered in indictments of the company issued earlier this year. It doesn't necessarily mean that new charges are being sought against the company, but it could represent another complication in U.S.-China trade talks, where Huawei has been an important piece of negotiations. We did reach out to the company that responded that per company policy, they don't comment on pending litigation. I'm still digging into those Amazon headlines, Kelly, so let me get back to you on those ones.
All right.
Back to you.
Deirdre, thanks very much. Deirdre Bosa.
Coming up, details of a new all-you-can-eat subscription service for luxury hotels. Plus, our cameras are inside the first ever, most expensive house for sale in America. We'll show you what $195 million buys coming up on Power Lunch.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike, and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet, and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings, strings, strings and things. Strings, strings, strings and things. Strings, strings, strings and things. Strings and
cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try click and collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try click and collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Chloe, is that you? Still lugging that old laptop round your lectures?
No, my name's not Chloe, it's Claire.
No,
No one wants to be seen with an old laptop at uni. Ask Curry's PC World about a new one, like the stylish HP Envy with its lights-in design. Only $749. Plus, save £100 more when you trade in your old qualifying laptop.
Nice new laptop, Chloe. Thanks. It's Chloe, like the goddess.
Save with instant trade-in at Curry's PC World. In-store only. See website for laptop trade-in qualifying criteria evaluation.
What's better than being at one with nature? How about being at two with nature? Get a 2-for-1 companion voucher valid for 2 years when you spend £10,000 each year on the British Airways American Express Premium Plus card. Probably best not to go for the silent retreat then. Search BA Amex to find out more. Representative 76% APR variable. Annual fee applies. Applicants must be 18 years or older. Subject to approval. Terms, taxes, fees and carrier charges apply.
For our half-price sale on a choice of floors and beds. For first-class free fitting. For kicking your heels off. For overexcited kids. And pets. For thrills and spills. For a special welcome home. Carpet Right for life. Offers end Tuesday. Free fitting on selected carpets and vinyl with selected underlay. Minimum spend applies.
Welcome back. It's time now for Powerhouse, and today we're going inside the most expensive home for sale in America. The price tag is $195 million. Robert Frank has more.
That's right. It's called the Chartwell Estate, and it's the former residence of the late Jerry Perenchio, the billionaire mogul who once co-owned and ran the Univision television network. Located in LA's exclusive Platinum Triangle, the Bel Air compound is beyond extravagant and includes hidden passageways buried underneath the house. This is the first time that TV cameras have ever been allowed inside. It's going to blow you away. Back in 1986, the former Univision chairman purchased the Bel Air mansion, and after a 5-year gut renovation, transformed the interior into an authentic replica of an 18th century French chateau. The billionaire businessman filled the 25,000 square foot mega home with rare European antiques and made some significant modern day additions.
The grand ballroom was designed for entertaining, and one of the special features of this property is that a flick of a switch, it becomes a theater.
One level below is the estate's massive wine cellar.
It's completely climate controlled and can hold 12,000 bottles of wine. You heard me right, 12,000 bottles. Mr. Perenchio loved to entertain, so he built this 40-car motor court, and above it, he built a beautiful rose garden.
Buried underneath the chateau are 2 tunnels, original to the home's 1935 construction.
And this particular tunnel takes you to the spectacular pool and pool house.
The billionaire added a giant's head to the mouth of one of the tunnels, and while redwood trees are usually only found in Northern California, that didn't stop the TV titan from transplanting dozens of majestic sequoias to create a private redwood grove in his own backyard.
Not only is there nothing like this in Los Angeles, I don't think there's anything like this in the country.
Now, generally, the Golden Triangle, that market is very weak right now. Sales in Bel Air down about 20% in the second quarter. And the broader LA luxury real estate market saw prices drop 12%. But we had the Candy Spelling Mansion. That was a very famous home in Beverly Hills, wife of and widow of Aaron Spelling. That recently sold for $120 million. So 195 is not crazy, but it's probably, if it does sell, going to be
was crazy.
Yeah, it needs a little bit of updating, as they say.
Right. We want to also ask you about the latest subscription service, this one for luxury hotels.
Yeah, so this is brand new, never been tried before. It's being billed as endless travel for $2,500 a month. Now, Inspirato, the Denver-based high-end travel company, has launched a product that allows users to book hotels and luxury homes for a subscription price of $2,500 a month. Now, you have your choice of hundreds of luxury hotels around the world, including the Baccarat and Mandarin in Manhattan, the Montage in Beverly Hills, the Peninsula in Paris, the Ritz in London. So lots of top properties. The only catch is you have to wait 1 week after checking out from one hotel to book the next one. But for $5,000 a month, you can book 2 reservations at a time, meaning you could stay nonstop in luxury hotels for an entire month. Now, for an extra $500, you can add a person on a pass so friends and family can also book. So how do they make money? Well, Inspirato says they have special technology that allows them to get empty rooms at top hotels for low cost. So no matter how much a member uses their pass during a month, they say they would still be profitable.
Inspirato has figured out a mechanism to be able to communicate with these hotels, purchase inventory at rates that are substantially below what you would be able to get at on your own.
And they've signed up about 500 pass holders so far. They had just launched it last month. So far, it's done fairly well. It'll be interesting to see over the long term whether it works.
$5,000 a month, you can hold 2.
Yeah.
So it's cheaper than rent in some cities.
Absolutely. Yeah, and certainly
There
cheaper
you
than
go. Forget
hotel.
about I'm staying at the Mandarin.
Just go hotel hopping.
Thank you, Robert.
Thank you, guys.
Well, booking a trip is always an anxious moment. You never know if you're getting that flight at the right time, but there's an app for that. We're going to talk about how Hopper predicts future prices and what it says about the fall travel season, and we're going to ask about Hurricane Dorian. That's next on Power Lunch.
Flight number 4.
At Romans, you can rent your next home from just £36, plus your first month's rent. No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
Live big and spend less on the brands you adore and dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet and eat every weekday till late. So sit back, unwind and let style lead the way and give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Dad, I'm bored.
Why don't you help me water the garden?
Don't worry, this summer we've got loads of exciting activities to keep the kids entertained. How about you go explore the Rainham Marshes and play bushwalk bingo on the way?
Yay!
Look online for Asda Tour de Fun to find amazing walks here in London, from art trails to long distance. All powered by Sustrans, a registered UK charity. Go discover your fun side with Asda.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings and things. Strings and things. Strings and things.
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
Chloe, is that you? Still lugging that old laptop round your lectures?
No, my name's not Chloe, it's Claire. No,
No
Clarissa.
one wants to be seen with an old laptop at uni. Ask Curry's PC World about a new one, like the stylish HP Envy with its light-in design. Only $749. Plus, save £100 more when you trade in your old qualifying laptop.
Nice new laptop, Chloe. Thanks. It's Chloe, like the goddess.
Save with instant trade-in at Curry's PC World. In-store only. See website for laptop trade-in qualifying criteria and evaluation.
your choice.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
As it heads to Florida, it's now predicted to become a Category 4 storm, and it's threatening to disrupt one of the busiest travel weekends of the year. Flight cancellations have already begun. The long weekend is also marking the end of the summer travel season. And new data from Hopper, which is an app that tracks millions of flights to advise users on their optimal time to book for the lowest price. Well, Hopper shows prices dropping in September and staying low until the holiday season. Let's bring in Haley Berg. She's an economist there. Haley, it's good to see you. And first of all, because Dorian is on our minds, what effects are you guys seeing there?
So as you've said, we're already seeing cancellations begin and travelers starting to look for options if they can't get to their more tropical or Florida destinations for the long weekend.
And I mean, when you guys help with that, I guess some people can go to their airline and maybe change it directly, and a lot of times they'll waive fees for that. Or can you kind of help them figure out maybe a cheap way to do that?
So typically we recommend, if you already have a flight booked, to go to the airline website or even reach out to their customer service to understand what your options are. In a case like a hurricane or natural disaster, typically airlines start either waiving change fees or allowing refunds and rerouting for their customers. Their goal is to maintain those customers and just shift the demand away from the weekend of the natural disaster or hurricane to another date.
Yeah, it's a win-win. I mean, it's good for the travelers, good for the airlines. So when it comes to pricing, as you said, once we get into September, it starts to drop, doesn't it, for the next couple of months? It's a good time to travel.
Exactly. September, October, and the beginning of November are actually some of the best times to travel. We're coming down from those peak summer prices and haven't quite hit the peak holiday prices. So airlines have to lower prices to make sure they can fill up planes and use their capacity through the fall shoulder season.
Is there a capacity issue at all, Haley, because of the grounding of the 737 MAX?
In the fall shoulder season, so that period from September to November, we're not expecting a huge capacity issue, in part because capacity is still growing in 2019 compared to last year. Where we're likely to see potential supply problems is during the busy holiday season. And that's because we have more people traveling from big cities, big airport hubs, to more regional, local airports as they head home for the holidays. Those routes are more difficult to cover when you have the high demand on major routes and local routes, which is kind of unique to the holiday season.
How does it work, Haley, that you guys are able to figure out, constantly when the best time is to book these flights?
So at Hopper, we use an incredible amount of data going back more than 5 years to be constantly tracking historical and current prices for every origin, destination, departure, return pair that people are searching for. So we use that historical demand and price data to forecast what we think the best deal price will be for our users, and then we send them a notification when that price is available.
What if you're wrong? You're going to pay me the difference?
So about 95% of the time, we are right, or we at least do no harm. So our goal is always to be improving our forecast accuracy and ensuring that travelers are at least doing no harm when they use us.
Appreciate it. Haley, thanks very much for joining us today.
Thank you.
Check Please is next.
I like to make my life easy.
Live big and spend less on the brands you adore, and dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike, and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet, and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
I'm home.
Hi, Mum. Wow, what's that?
Saltwater supercars from Shell. Toy cars that run on salt water.
Science-fueled family fun. Fill up with £30 or more and you'll qualify to buy a car from just $3.99.
Track ready.
Check.
Saltwater ready.
Check.
Go!
Fill up on fun with saltwater supercars at Shell. Participating sites, conditions apply. See shell.co.uk/saltwater supercars for details.
No. No. No.
What are you doing?
I don't like any of our preset radio stations. Ugh, we need a new car.
With the Jaguar E-Pace at $299 a month on personal contract hire, you'll find a reason.
That's better. And it's a Jaguar.
Initial rental £3,588. 48-month term. Subject to status. 8,000 miles per annum. Excess mileage and return conditions apply. No ownership option. Ends 30th of September. Participating retailers only. Jaguar contract hire.
I didn't choose you. You chose me. When you broke from the crowd and pawed at my knee. Soon you'll be feeling right at home. You'll be a bit unsure, but you're free to roam. What's good to chew? What's nice to nibble? Wet food, dry food, tin food, kibble? You might sometimes be cheeky, not always wise. But I know I found love in those puppy dog eyes. Join the free VIP Puppy Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/puppy club or join in store. T's and C's apply.
We've got a nice rally on our hands, and it seems to be a little bit more convincing than in yesterday's rally, where we saw mostly the leadership from financials and retail. We see a very broad-based rally with technology joining in on the action today as
and
well.
It's weird, we've had some more hawkish rhetoric out of the ECB. Markets shrugging that off.
Yep, apparently. We'll see. Thanks for watching Power Lunch.
Closing bell starts right now.
Good afternoon. Welcome to the Closing Bell. I'm Wilfred Frost. I'm at the Cap Post. That stock is up 2.7%. Trade-related stocks doing well today amid resolution hopes with China. The broader market's up 1.3% with 59 minutes left of trade.
I'm Sarah Eisen. Welcome, everyone. Let's look at what is driving the action. Stocks surging as President Trump says trade talks are set to resume, quote, at a different level. China also sending positive signals today, saying it's in favor of a calm approach and hinting it won't retaliate against the latest round of tariffs. And Treasury yields taking a pause from their recent slide amid a more optimistic outlook. Joining us for the final hour of trade, Barry Knapp is back from Ironside's macroeconomics. Certainly the tone feels better. Do you think it's anything fundamental with the U.S.-China trade tensions or some month-end rebalancing stuff?
Oh, I suspect there's a bit of month-end rebalancing going on. I think it's too early to tell whether the macroeconomic fallout from the latest negative business confidence shock has what degree of effect it's had. Next week's ISM on Tuesday, payrolls on Friday will be much more important benchmarks to see whether we're over the hump, so to speak, on this. I tend to be pretty cautious and not chase the move today.
Let's drill down on the big stories that we're watching today. Kayla has the details on the new hope in the China trade war. Courtney Reagan is covering a slew of retail movers, and Josh Lipton is tracking tariff concerns for Apple. But Kayla, let's start with you.
Well, Wilf, the hope began overnight when Chinese officials said there had been some effective communication between the two countries, and it continued this morning when President Trump said in a radio interview there's a conversation scheduled today.
Well, I've talk scheduled. There is a talk scheduled for today at a different level. And yeah, they've been talking. Well, let's see what the end product is. I think that's what you have to judge it by.
Beijing wants Washington to shelve tariffs on $112 billion in goods that leave ports this weekend, even though the U.S. Trade Representative has filed legal notice for those tariffs to go into effect September 1st. Sarah?
Kayla, thank you. Mixed bag for the retail sector today following a slew of earnings before the bell. Courtney Reagan has the details. Courtney.
Hi there, Sarah. So Best Buy had a mixed quarter, raised its earnings forecast, but lowered the high end of the revenue forecast. Tariffs now impact 60% of Best Buy's cost of goods sold, but its CEO thinks the impact will be, quote, substantially less due to its mitigation strategies. Still, it's creating uncertainty. It also expects gaming to continue to be soft and weigh on results for the rest of the year. Dollar Tree was also mixed, but it raised its annual earnings forecast. Prior to List 4 and the new higher tariff rates, Dollar Tree had said it, quote, successfully mitigated most of the impact. It's figuring out the rest now. Dollar General had the best report of the day, beating across the board, raising its full-year guidance with plans to, quote, successfully mitigate, absorb, or otherwise offset the tariff impact. Wilf?
Courtney, thank you very much. Turning now to Apple, facing the possibility of new tariffs hitting its wearables products starting this weekend. Josh Lipton has more for us in San Francisco. Hey, Josh.
So, Wilf, Apple's Watch and AirPods could face 15% tariffs beginning September 1st. Now, analysts estimate Apple has sold 80 million watches and 50 million AirPods. So if Apple decides to absorb the tariffs, analysts estimate it could cost the company $500 million. Or Apple could try and pass along price increases to consumers, though that, of course, risks denting demand. But there is another possibility here that the government decides to exempt Apple from these levies. That's what Gene Munster of Loop Ventures bets will happen, saying that the government, he doesn't think, is ultimately going to want to penalize such popular products. Guys, back to you.
Josh, thank you very much. Joining us now to talk more about the market rally is Laurie Calvasina, head of U.S. equity strategy at RBC Capital Markets. Barry Knapp, of course, still with us as well. Laurie, let's start with the broad markets. Clearly a nice bounce today. What are the key levels you've been looking at on the S&P 500, though, in the course of this week?
So I would say, I'm actually in Barry's camp. I wldn't be chasing, these kind of fumes that are bidding the market up today. The number I'm actually watching for, frankly, is 27.25, which would take us down to about a 10% pullback from the late July highs. I think we've had a crowding problem in this market, a positioning problem in this market. The tariff news, maybe it's not going to get worse. I think that's what we've heard over the last couple of days anytime soon, but it is materially worse over the past week, and we are about to go into conference season. We're going to hear companies talking about how it's getting worse, the impacts there. To me, I would look for that down 10% move.
So is it based on earnings expectations ultimately and how the tariffs are going to feed through? You think they're too high at this point?
I think there's first order impacts and secondary impacts. The first order impacts, I'll tell you, I personally was actually starting to feel a little bit better about 3Q and 4Q estimates. And what we heard, over the last few weeks, the tariffs are going to go up a little bit. So we've got some cost issues we've got to deal with there directly. That creates a possibility that you'll have downward revisions. We've also spooked corporates again, and that creates another opportunity for behavior to turn more cautious. We've seen a lot of emphasis on cost cutting this year to get to those flattish earnings we had in the first half of the year. I think you're going to hear more of that conservatism. But remember, a lot of companies have other companies as customers, and so there will be an impact, I think.
Barry, where are you on earnings estimates for next year? Already come down enough?
I think that the estimates are, I just think there's a big dispersion of range of outcomes around them. So if you think about what's happened over the course of this year, consumption fell off a cliff late in the year in response to the stock market crash. It was very much an echo of 1987 and 88. The same dynamic occurred. There was no leverage in the household sector. Consumption came back, worked through the inventories. Even this morning's inventory numbers look like they've been all drawn down. My thesis was that the manufacturing slowdown in the U.S. had less to do with global trade and tariffs and more to do with that unexpected inventory glut and then drawdown, and that if we got to this point, you'd see global trade start to recover and you would see U.S. manufacturing coming back. But as Laurie described, we've had another business confidence shock. And so that business confidence shock is a major determinant whether we will get spending on software to surge the way it did last year, driving non-inflationary growth. Productivity rebounded sharply over the last 18 months. That could all stall. If software and research and development investment stalled out in the second half of the year, then next year's numbers are flat at best. And so we're at a big key inflection point.
So where does that leave us on valuation of the market and what's a fair multiple? So we're less than 4% off the highs, even though it's felt like a bumpy month of August. Much worse for some of the cyclical sectors.
Yeah, and look, I think you have to look a little bit beyond PE multiples. A PE today is not the same as a PE 2 years ago because of tax reform. So I think historical comparisons are difficult. When you start to look at valuations with things like price to sales, price to cash flow, EV to EBITDA, things that haven't gotten sort of distorted by the tax impact, I mean, we're basically trading very close to levels that have marked the ceiling of this cycle. And if you bake them all together, our model says we're about one standard deviation above the long-term average. So we're not cheap. It's going to take more than a 4% drop. A 7% drop, I think, was the worst we saw earlier this month. It takes more than that to get that valuation froth out.
Does that account for the lower rates, though, as well, which presumably do help all of those multiples in a fair way?
Well, we've actually spent a lot of time looking at PE multiples against changes in the Fed fund target rate. And we did a study earlier this year when we were right around that high in the market. And we found that you'd had expansion in the PE multiple in the high teens. And that's actually the best that we've ever seen during a Fed easing cycle, except if you look at the QE era. So yes, I know we're in Fed easing mode. I know that's good for PE multiples. Are we about to throw just massive amounts of stimulus to get us something like a 60% PE expansion again? I don't think we're there yet.
So you guys are both kind of saying fight the Fed here.
Oh, absolutely. I mean, to me, the most telling thing that happened...
Are you not supposed to fight the Fed?
Well, here's how I would think about it. If you go through the non-crisis period of QE from November of 2010, when QE2 was launched, through the taper tantrum, and you think about the equity risk premium, earnings yield less the real 10-year Treasury yield of cyclical stocks, it actually widened sharply during that period. Bond-like stocks stayed flat, but with real rates going down 2%, that drove those stocks up. So if the Fed gets back into expanding their balance sheet mode, that'll help utilities a lot, that'll help REITs a lot, but it won't do anything for the economically sensitive cyclical sectors. And capital investment fell through that whole period. So to me, that is the whole key here. Fed is not going to bail out economically sensitive cyclical sectors and drive capital investment.
Laurie, the final word?
Yeah, I would say, look, I don't think we should fight the Fed here. Let's just recognize the Fed has already done the heavy lifting. We can't count on them for everything.
Well, I mean, the bond market is expecting a few more cuts.
I think we are going to probably get a few more cuts, but I think the problem is what's been priced into the market is that we would get Fed easing without any damage in the underlying economy that would cause the Fed to need to do that. If you look back historically, whenever the Fed is in an easing mode, ISM flips negative. Jobless claims start to spike. We haven't seen that yet. The market's been assuming that we'd get the Fed cuts but wouldn't have to pay the price. If you start to see some of that damage in the economy, I think you're going to pay the price.
Laurie, thanks for joining us. Great to see you as always. After the break, markets stuck in a range. We'll take a look at all the ups and downs in the S&P 500 this month and the key levels to watch as we head into September.
Later, we're going to dive into former New York Fed President Bill Dudley's controversial op-ed on Fed policy. A former New York Fed official who worked with Dudley tells us why he says the central bank should resist the urge to get political. This one really hit a nerve. As we head to break, here's a check on our data tracker today. The second reading of Q2 GDP came in at 2%, matching expectations, but down a tenth from the first reading. Initial jobless claims did rise by 4,000 last week, but still at a pretty historically low 215,000. Closing bell will be right back. Dow's up 325, 50 minutes till the close.
Every day, visionaries are creating the future.
Live big and spend less on the brands you adore. And dine by the waterside. Who could want more? Lap up the savings as much as the view with Ted Baker, Hackett, Nike, and Coach too. Lock Fine and Five Guys make it a date. You can shop, meet, and eat every weekday till late. So sit back, unwind, and let style lead the way. And give yourself a different day at Gunwharf Keys. Waterfront outlet shopping.
Strength and things. Strength and things. Strength and things. Strings and things. Strings and things and strings and things. Strings and things. Strings and things.
Now there's a whole range of strings and things called strings and things, including cheese strings, yollies, and new cheese shapes. Find them all in the cheese and yogurt aisle.
Strings and things.
I didn't choose you, you chose me. When you broke from the crowd and pawed at my knee, soon you'll be feeling right at home. You'll be a bit unsure, but you're free to roam. What's good to chew? What's nice to nibble? Wet food, dry food, tin food, kibble? You might sometimes be cheeky, not always wise, but I know I found love in those puppy dog eyes. Join the free VIP Puppy Club from Pets at Home for advice and exclusive offers, including 10% off your first shop in store. Visit petsathome.com/puppy club or join in store. T's and C's apply.
At Tesco, we can pop our pasta in your Astra, our Red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try Click and Collect. Just go to tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try Click and Collect at tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
Chloe, is that you? Still lugging that old laptop round your lectures?
No, my name's not Chloe, it's Claire. No,
No one wants to be seen with an old laptop at uni. Ask Curry's PC World about a new one, like the stylish HP Envy with its light-in design. Only $749. Plus, save £100 more when you trade in your old qualifying laptop.
Nice new laptop, Chloe. Thanks. It's Chloe, like the goddess.
Save with instant trade-in at Curry's PC World. In-store only. See website for laptop trade-in qualifying criteria and evaluation.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
47 minutes left of trade, and we've got a nice rally on our hands. Another day in a row. Nasdaq's up 1.5%, S&P up 1.3%. We've been steady higher pretty much all day. The highs for the Dow up 372. Right now we're up about 328. Let's send it to Mike Santoli for today's market dashboards. Mike.
Sarah, here's what we have. First, just give me a reason, or really just give the market a reason to pop up to the higher end of its trading range. It's been in place most of August. And then after that, another brick in the wall. That's the wall of worry that this market is now climbing. Higher ground. Just going to take a look at the internals of this rally, try to gauge the underlying strength there, and then don't stop the party. That party being this economic expansion. We'll look at some macro indicators there. So first of all, take a look at the S&P 500 month to date. This has been your August, and look at how obedient it has so far been in sort of going methodically right within this range. So that's about 29.30. We're right here, 29.24, and this is around 28.20. So we've just sort of been ping-ponging back and forth between this. I would point out, 1 week ago today, we closed at 29.22. That's within a few points of where we are. And then on the 13th, we closed at 29.26. So essentially, the market has recouped what we lost from the trade war escalation the other day. It's been trading I think in a very technical way. But what's interesting about it is this bottom of the range has held pretty well despite all the bad news, despite the yield curve inversion. So it has not broken, just bent, I think is what we're going to say. Look at the sector patterns too, though. We've had an unusually one-way market action. So far, 12 days this month, you've had all 11 sectors moving either up or down on a given day. Today, we're on the cusp. Consumer staples are about flat. The rest of them are up. That shows you that we're trading in a very macro way. The indexes are moving. People are reallocating asset classes. They're not really looking at companies. Obviously, we're on the back end of earnings season. We'll see if that means that some kind of a major market inflection point is near, guys.
And Mike, low volume August plays into both of those charts.
To some degree, Wolf, although I have to say this week has actually not been bad on overall volumes, all things considered. So yes, I think you do get some of that gappy moves and essentially just sort of the machines obeying some of these lines on the chart because it's not necessarily full participation. But I wouldn't necessarily say low volume is causing the market to sort of catch this upside air pocket.
All right, Mike, thank you. We'll see you in just a bit. What do you do, Barry, in a kind of market like this where you have everybody moving together? Macro is the story. I mean, it can be frustrating for stock pickers.
For sure it can be. Listen, I think you need to get broad market measures of risk like the VIX, the shape of the VIX curve, 6 month versus 1 month, skew, vol. You need to get all those indexes to an extreme low before you buy. You definitely have to come in on the weakness. On Tuesdays, after Tuesday's close, we were about 0.6 of a standard deviation below the post-crisis mean. It was getting a little oversold. You can buy those dips if you wish. I agree with Lori. Probably 10% is the right level to re-engage in the market, down 10% from the high.